Hey everybody, it's Pete. Welcome. It is Monday, April 27th, 2020. Welcome to today's episode of Stocks for Breakfast. My name is Pete Renzulli. If you find these videos helpful, absolutely leave comments. As soon as I can, I'll get back. If you have any stocks that you want to watch or just want an analysis on from a trading perspective, absolutely leave that in the comment. If you have any trading challenges that you're having a hard time with, leave that in the comments as well. And also, if you like the video, if you find them helpful, click down and subscribe, and you'll get updates for when new videos are coming out. We're actually going to be coming out with a new video education on candlestick charting. I had a little one the other day. I'm going to broaden it a little bit more to really, put the pieces together. I got some really nice emails about it, specifically about the simplicity of it. Candlestick charting can be very in-depth if you make it. But over the years, in my own trading, especially, and a lot of the other people that I've traded with over the years, you would be amazed at the simplicity of the chart setups of some very, very big traders. I'm talking about seven-figure people who only want to know one thing. Is it going up or down, and is it obvious? That's it. From there, then you actually end up learning how to manage your winning trades. The biggest question that comes out all the time is using stuff like stochastics, RSI, MACD, all of those kind of indicators where most people are looking for a divergence, where let's say your stock pushes higher, pulls back, pushes higher again. The second time it makes a new high, but the indicator, let's say whether it's stochastics, MACD, or specifically those two, but maybe RSI as well, the stock makes a new high in price, but the indicator does not, and that divergence leads a lot of people to either exiting a winning trade or worse, which actually is something I'm going to talk about Friday's trading, worse actually looking for a short sale because of the divergence. And the reason I bring that up is one of the biggest aspects of these videos and building this community with you together is I want you to learn from my mistakes early in my career. And actually Friday afternoon was a really good one from a day trading perspective, where the market was rallying, the market was kind of doing nothing in the context of the last 3 weeks of rallying. So in our minds, we have this thought process of, well, if I can't make money on a long anymore, meaning if I can't make money as a buyer anymore, and the market clearly looks like it's slowing down, that means that it's reversing. And then you end up putting out these very poorly argued short sales, stocks that have no right selling them short just because they're not going up right now. And you can see the rally that we got into, I believe it was the last 3 hours of the day on Friday, where we finally got past those levels that we were watching on the tape and had a really strong move to the upside, specifically in the indices on Friday, where for those of you that aren't day trading, or actively trading, maybe you're watching these videos to hold one of the stocks that we mentioned or get an idea for your gameplay to hold stocks for a month. Absolutely nothing wrong with that. That's, believe it or not, that's the majority of the people that I speak to, because you should be keeping your full-time job and make this your side hustle, right? The idea that shorting something because it's no longer working to the upside, but it's still a bullish argument, is just a really bad idea. So it was really exciting to be getting some emails back from people in the context of, you helped me not lose money today in an idea that I normally would have taken. And that really matters, because the more you stay away from those crappy ideas, and again, if you listen to everything that we talk about building an argument, and you have your A-plus trade, and I want to keep going over this because it really is an important way to drill into your head what you should be allocating money to and when you should just be stepping aside and letting it go. So if you have your A-plus trade, which means all of your criteria is there. Oh my gosh, everything looked perfect, I want to be a buyer, or everything looks perfect, I want to be a seller, right? If you have your A-plus trade, any trade that is not your A-plus trade starts walking yourself away from perfect. So the further you move away from perfect, the less conviction level you should have, which means that your edge is diminishing, and the amount you should risk on those trades should also be lower, because your odds of following through are lower. So I get a kick out of it when people talk about risk reward on their ideas, and they just throw a random, well, I want to risk $1 to make three, and absolutely. But what are the odds of you making the three? That's the point of what I talk about when we discuss building an argument for a trade. I'm going to curse here for a second, but so most people pull that number out of their ass. They just say, I want to make 3-1 on a trade. They find a trade that they like for whatever reason, but it's not, let's say it's not a great idea. And they say, but I want to make 3 on this trade and I'm only going to risk 1. The whole point of trading, the whole point of moving past being a chart reader and getting to the point where you're a tape reader and you can call yourself a trader, is it means that you've built a great argument that the odds of getting 3 justify risking 1. Not just coming up with saying, I want to make 3-1. Yes, that's a good concept. But real trading in the real world has to set up arguments that you actually believe it's going to happen. And the only way to believe it's going to happen is to spend the time, build a strategy, and trade it with real money and trade it flawlessly with expectation that if you do what you're supposed to over time, you will make money. So I just want to get that across in context of heading into today. We got an interesting week coming up. Last week, if you remember, going into Monday over the weekend, we saw clear profit taking coming in. We said that absolutely do we believe we're going to go sideways to down. A lot of the stocks that have been ripping, worst case scenario, they'll go sideways. The more likely scenario was they pulled back, and that's exactly what we saw. I think Shop was probably one of the biggest ones, which was an amazing example where we actually rallied and we saw what we call exhaustion, which is a momentum move in the direction of order flow, ending on large candlesticks, ending with large volume. Now, how do you know that's the end? That's the obvious question that I get from everybody is, how do you know it's the end? Well, what you know is it's an expansion in volatility, an expansion in volume after a significant move to the upside. Now, the whole thing that's a little subjective is what is a significant move to the upside, and it really doesn't matter. That's the point. It can't be the first or second candlestick that breaks out, because if that's coming out of a trading range, we would call that fuel to the upside. The expansion in volatility, the large candlestick, and the large volume after what you would perceive a large momentum move to the upside, also in the direction of order flow, that is where we are anticipating the end, because we're seeing what is called a cleanup print. So to understand what that means, imagine you're a hedge fund and you have to buy 5 million shares of stock. And over the period of a week to 10 days, you have done that, maybe even longer, right? So you're buying it, and it doesn't matter if it's 100 shares going back and forth with an algorithm or if you're doing it physically. It really doesn't matter. But now you push the stock up to a point where now you only have 500,000 shares left. Like, well, I could do this, but I know that I'm the only one buying this stock because it's only going up when I'm buying it. So what ends up happening is I'm Pete and you're Jane. Jane owns another hedge fund. And I'm like, Jane, I have 500,000 shares of the stock left. Let's make an offer. Let's make a deal. 100% okay. It's the way things are done all the time. You basically say, okay, I'll take them for that amount of shares. That is the final print. You see a large volume print go off, and that's generally speaking why you see stocks turn around when you spot exhaustion, because that's what's actually happening behind the scenes. So the point that I want to make is that doesn't mean it's a spot to reverse your position, because you still have all that history of buying pressure on the upside. What it means is that you would move up your trailing stop in case that is the final print and somebody else doesn't step in. So you don't want to bail on it, but you want to move up your trailing stop because you've noticed something different changed using your tape reading skills. So it's kind of interesting, and we'll go to the chart in a second to take a look at it, is Shop the very next day had a $109 reversal after we spotted the exhaustion. It's still kind of hovering up in that area. Excuse me, I have to sneeze. But my point is, if you were trading it for a short-term trade and you spotted it and locked in those profits, you weren't sitting through that ginormous reversal to the downside. Now, it's kind of still floating sideways. We're not sure what's going to happen now, which is actually going to be the theme for the week. So we're going to go into the charts right now. I just want to mention two things. Number one is most of the indices and quite a few stocks last week traded sideways. which means that we were also an inside week on a lot of the candlesticks. The only one that was not an inside week was the Russell 2000. The small cap stocks actually was well offered, and we're going to take a look at that as well. One stock that I think is going to be very interesting, actually two this week, I want to make sure I get in the beginning of the video. Number one is Boeing. It finally broke out of that pennant. We had a monster down day where we made quite a few trades on the short side, selling it short after it broke out and traded lower and broke a support level. It has earnings this week. So I'm going to day trade it and only day trade it into earnings. We'll let earnings play itself out and then play it again. But I'll show you the chart on that as well. And a stock that had a really good April that has consolidated its gains over that period, over the last 7 trading days, let's say, is Roku. So Roku is one of the stocks that I'm going to be looking for an expansion in volatility as well this week. But here's the key to everything I'm talking about. Inside days, inside candles, inside weeks, they really don't have the bigger picture behind them. Best case scenario, that A+ trade is if you consolidate, you break out in the direction, and that is what we use as entry signals. But generally speaking, when something consolidates like that, which a lot of stocks did over last week, we'll take a look at how ugly it was in the SPY last week, the SPY ETF. We're more looking for an expansion in volatility. So we're not really calling direction this week as much as with the big earnings coming out and an expansion from the consolidation. The likelihood is it's going to trade higher, but we might have to be a little bit nimble this week because that inside consolidation we'd be anticipating as a swing trade to the upside, but we need to see us go well bid again, which means we have 2 weeks of highs to take out. We have to take out the week that just finished and the previous week because they're pretty close in order for us to say the bullish order flow is continuing on the weekly charts. The monthly charts are still a mess for obvious reasons. We had March, which had a monster month to the downside, massive volatility. Most of the months are still inside of March. So most of the months are inside candlesticks. So we're going to go to the charts. We're going to take a look at the setup from the daily candlestick perspective, which if you watch the candlesticks that I did last week, there's a bunch of indecision candles, also known as melted candles, which is what ultimately ended up forming that inside week. At the daily SPY as well, almost 2 weeks of consolidation, which is really kind of driving a lot of people crazy who only trade the indices. So we're going to go to the charts. We're going to take a look at some stocks. We'll take a look at some setups. We're going to kind of do some rapid fire setups here as well. So you can see here's the SPY. You can see all the melted candles across the board and the strong close on Friday. Here's actually what I wanted to talk about on Friday. This actually was Friday's open. So you can see most of the day. Now, taking into consideration, we were actually bullish heading in here, but most of the day we were below the opening price. And this is the mistake what traders make is short selling what is on the weekly chart strong. So that's very hard to short sell against that and have extreme confidence. But then you break it down here and you say, well, what is the trade that is the right trade to make? And here's the key. If you did not overtrade here, if you did not throw money away because it wasn't going up anymore or for that particular day as a day trader, remember the same principles apply on the weekly charts, and waited until you got confirmation here to get back above the opening price for the day, waited for an inside candlestick. Now either one of these you could have traded as a spot to get long. The close above the open was sort of confirmation, but it was only 5 minutes, but then you actually got an inside candlestick breakout. So this is one entry. This swing low is another entry. This inside candlestick breakout is another entry. So a good lesson there in paying attention to be patient and not fighting this. So what we have now is an inside candlestick on the weekly candlesticks. We have to break 2 weeks highs in order for us to feel the bullish order flow is continuing to the upside. Now we have to assume it's going to continue until we see a reason that it won't. Now, what would put us in a situation where we don't? 2 things can unfold here. We could end up taking this out and being bullish aggressively again, or if we start to trade below this high and this low, then we would go well offered on the week, and especially if we were well offered on the week and trading below the weekly open, we would start to look for short sale opportunities. So I just want to cover a couple of very quick news stories. Number one is this is the reason, quote unquote, that they're giving that the market is rallying again. this morning, and we'll take a look at what that means. Actually, right here, we'll look at that real quick. This is where we are in the S&P futures at roughly 6:15 in the morning. So this line is Friday's close. You can see the rally on Friday. We kind of hovered around neutral last night, and now we're actually rallying again. The reason that they're giving is this. A lot of places are talking about reopening. I don't want to get into all of that. That's you can make a decision about whether or not we think that's the right thing or not to do. That is the reason, so let's not argue with reality. Next thing I want to talk about is this is actually, in my opinion, very, very funny. If you think about trading and you think about we are always going from one earnings season to the next to determine what we believe a stock is going to do. That's every 3 months. And if you head into earnings on a daily basis, like we're going to do this week with some really big earnings, you're like anticipating with bated breath what's going to happen. And nobody knows what's going to happen. The earnings numbers could come out and be whatever they're going to be. But what's funny here is that they're predicting where the market's going to be 4 years from now. Nobody knows what's going to happen when earnings are announced this week, but they're predicting what's going to happen 4 years from now. I understand it's value line. I understand that they have good history, but come on, really? Where we're going to be in 2024? Nobody knows that. That's my point. Next, we have Boeing. I just gave you an idea of Boeing that I've been trading it pretty aggressively, specifically on Friday, while the market was kind of floundering neutral on Friday. Show you what we were actually looking at. This is actually what we were looking at on Friday. The biggest trade of the day, to give you an example, was when we finally got below this low here, closed. We actually had two signals where we broke down previous day's low and just really took out the lows. You can see volume was good the entire day, so we actually did get some good follow through all day. And again, I don't want to get too much in the weeds here on day trading stuff, but I wanted to give you some ideas if you're not day trading, what we're potentially looking at. So you can see the consolidation here in Boeing. Why we were looking at it, it finally broke down out of what could be called nothing more than basically 4 weeks of tightening. And this is exactly what I'm talking about with the larger picture of the markets. If we go to, let's say we'll go to the Qs and look at it on a weekly candlestick, we're actually inside here as well. But again, very interesting that we closed near the highs. The diamonds or the Dow ETF, same thing. Actually, this one was well offered. And the Russell inside. That's what actually the Dow is inside well offered. The Russell was actually inside candlestick. So it basically means small cap stocks did not participate the last 2 weeks, which is pretty interesting because as the market, if you know anything about long-term history of the market, usually it's the larger cap stocks peak, they start rolling over, small cap stocks kind of keep skidding higher, and that's usually the way that you see the market turning because small cap stocks are kind of like getting that afterglow of the larger market pushing higher. And it's one way of anticipating and finding when the market rolls over because the small cap stocks are still going, but the leaders, are rolling over. So we're going to get into some trades on the short side. A couple of stocks that I want to talk about. BYND actually had double normal volume on Friday. We actually got back into this trading range and closed off the highs. I'll just show you the volume here. So you can see the big volume spike. This is kind of what we're talking about with exhaustion. So what I'd be looking for in BYND is one more test of the previous day's high, which would be just below 112. And then I'd look for a day or two of profit taking there because the fact that we're stuck in this range again means that's the right price. Let's actually take a look at W. Was a really big one. Let's get the volume off the chart there for a second. W actually came out of a consolidation, broke the resistance here and had a big day. And you can get an idea of what the day looked like on Friday. Look at that. When you actually do a good job of sorting through your stocks, this stock had amazing relative strength relative to the market doing nothing, which we showed you before. The market kind of did nothing for the first few hours of the day. So that's really the difference between a great trader and an average trader. Average trader saying the market's not doing anything, there's nothing for me to do. A great trader will work the keyboard and go and find something to do. Now, I'm not saying to overtrade if there's nothing there, but if something is there, you got to make money on it because, there it is, right? So we're looking for W to follow through. But again, in the context of exhaustion, we are seeing a massive spike. Now, what's different about this chart from Beyond is, let's take a look at Beyond one more time, because it's important. Beyond is actually in the midst of a 3-week rally heading into resistance. W is not. Okay, W is not heading into resistance. It's actually clearing resistance levels. 130 would be the next one. But we do have a big spike in volume here. I'm looking for 130 to be the max before I start to pull back on the trade. Let's see, IMMU, very similar to this. We actually had, and what's interesting about this is actually met all of the criteria. Now, this is a trade where a lot of people get messed up. Well, first of all, we had a monster gap here and a monster gap here. So the stock went from 13 to 29 in just roughly 2 weeks. So the stock more than doubled in 2 weeks. This will be a good day trading stock. It will not be a good swing trading stock right now because it needs to consolidate this giant move, which is essentially what I was talking about in Roku as well. Roku has consolidated a really big move. If I could type, that would help. So you can see a really strong volume move here. But what's interesting about this is we had a really good move to the upside. Look at the volume here compared to what we saw in some of the other stocks. We had a giant volume increase during the move to the upside and a giant, is kind of an oxymoron, a giant decrease in volume during the pause, which is exactly what you want to see for a stock you anticipate moving higher. So I'm not going to necessarily call it my trade of the week, but I definitely think that Roku is going to be interesting to trade this week. And I'm not going to get it off our list. Etsy, I should say, I'm going to keep it on the list. Etsy is another one that had a really nice push, paused above the resistance level. If you look out, the next level is basically in the 71 area, so not a lot of room to the upside. If you happen to be long Etsy after this big move, that's the area. So you got one more day in Etsy. CVNA is one that we've been watching on the long side as well. And you can see here, it's got some resistance at 100. So I'm looking at this maybe 1 or 2 more days into 100. CRWD was also a stock that traded double its normal volume on Friday. Again, I'm looking for these clues. Look at the spike in volume here and the resistance level up here. So we're looking at 84. So this stock actually is breaking out. It finally got through 68, which was the level. And now it looks like 84 is the next level. So CRWD is stock to swing trade this week. Sienna cleared some levels where we are now looking at new 52-week highs. If we could stay above there, I have my alert set in Sienna above 47.50. It's a trade to keep in the watch list. CarMax, actually, KMX, another one. Nice volume breakout, cleared finally the 68 level, got above there. If you did not initiate a trade last week, you got plenty of room to go. So my buy stop, as most buy stops for swing trades, will be above Friday's high in CarMax. We discussed the gold stocks last week very clearly, multiple days that we were looking for them to hit resistance and consolidate, exactly what we have. I'm still looking for that to happen as well. As far as some stocks on the short side, we do not have amazing opportunities on the short side still. We need to see the market roll over. We just gave you what that criteria was before. Let's get that off the screen. So coal's actually in a recovered short sale. We had short covering rally, and now we're heading down. But again, this will give you the idea. We're really dragging the bottom of the barrel for a short sale. And I'm not saying we should be short selling. I'm saying if the market turns, you do need a list. TCO actually broke new 20-day lows, but rallied at the end of the day with the market. TAL Education actually also coming close to 20-day lows, but what a mess. Look at all the melted candles here. You probably can't unsee that anymore, right? So my point is there's not really great short sale opportunities, and that's the whole point really of setting up the market. Day trading stocks, I'm not going to call these as swing trades anymore because they're just too much all over the place. But from a day trading perspective, mRNA is giving some good intraday opportunity, as well as Zoom. Zoom actually, again, had some security issues on Friday, but you can see that it's been very, very active in both directions. So anyway, the game plan for the week is we have consolidated, and now we're going to let earnings and price action tell us and tip its hand. The greater likelihood would be to the upside, but a great trader, a great tape reader knows, let the market action tell me what's going to happen next. I have probabilities to the upside where the odds of follow through are greater. If that happens, you can trade with a little more conviction. And again, conviction means 3 things: more share size, hold longer in more positions, especially if more money's flowing into an individual sector. And if we should happen to break the downside, we need to break actually 2 weeks worth of trading to the downside to end up going well offered for the last 2 weeks. Possible to go low, well offered for last week, but as of right now, we're looking long coming out of the consolidation. Now, it doesn't sound, it could sound like I don't have an opinion for this week. I sound like I don't have a bias for this week. I actually do. I believe that we're going to continue going higher until I see a reason not to. And then we have scenarios on both sides from a trade management perspective. So one of the biggest things to take out of this video is really understand why you believe you have a 3-to-1 risk reward. Don't just pick numbers and say, I want to take 3-to-1 risk. Yes, that's what you want to do. But to become a trader, to really get to the other side, you have to say, why do I believe I'm going to capture the 3 and only risk 1? What are the odds of me hitting 3 times what I'm going to risk? And how do I build that argument to be a great trader and have more of those unfold on your chart? So stock of the week, I think for this week, again, that I'm going to give a lot of attention to is Boeing and Roku. A lot of earnings this week, so really be on top of what earnings you have coming out. AMAT, I believe, is the only big one that I normally watch this week coming out today. And as far as the day trading environment, if you happen to be day trading with us in the coaching room, we had some really good ideas on Friday. Jerry's doing a really good job calling out some trades, so is Tim. Let's get at it. New week started. Consolidation, we're looking for a breakout of that consolidation. If we continue to trade in there and we trade with a tight tape, be patient, because when we break out, it's going to be explosive. So let's be ready for that too. Stocks for breakfast, Monday, April 27, 2020. Thanks so much for joining me. If you like this video, please click down, subscribe, and if you have any questions, absolutely leave me a comment. Have a great day, everybody.